Okay, let's jump into things. A little bit later this morning. What are we at? 18 past 11. Excuse me. Look, start off with DXY because this has absolutely been all over the shop, as you can see here. This is on a 1 hour time frame, and this is a great representation of what we've been dealing with this week. But this, as a whole, as you can see, is what we've been dealing with over the last couple of weeks. So look, it is very, very much sort of like all over the shop and that with it all. But we are obviously sort of hanging around. So if this is our large sort of consolidation range area at the lows, yeah, we are hanging around the bottom end of it all. And any attempt to sort of shoot it back up, as you can see yesterday, sort of came up and hit that yearly open level. So we're on a negative side of where we sort of have spent the better part of the year, because I mean, this is the year back here. This is where we opened, and look at how long we spent up above that in positive US dollar sort of territory. And obviously, the market's still watching that level because as they decided to sort of squeeze it up and rally it up, that was pretty much a perfect position for them to sort of just knock it on the nose and bang back down to the lows again. So, look, at the moment, as I said, main sort of thing, and this is going back, you know, where are we at now? About a month. Month we've been in this sort of range down the bottom here. Ranges is, I mean, there's two things that could be happening here. One is obviously just sort of stalling while the market digests it and decides whether it's really going to break and we're going to come down into sort of, the 90s kind of thing. Or is this building a base in which it's going to have a rally attempt and, as I've said a couple of times, potentially sort of squeeze up to the top side over here. Now, look, even if it does decide to get on this bit of a push and sort of shoot up here in the markets that go, look, you know what, we are waiting for the rate cuts. The rate cuts have now come. We know what's happening. We've got a better picture of what the Fed's going to be doing, sort of potentially sort of moving forward through the rest of the year. Same sort of rhetoric of, it's all about the data, watch the data, all this sort of stuff. You could sort of see people go, okay, look, yeah, we've been positioning for this for the last couple of months. Here we are now. It's happened, and move on to the next hot topic kind of thing. Because remember, it's not just the Fed. You've still got ECB, which are cutting and have been cutting more than the Fed. The Fed have only cut once, and yes, it was a big cut to sort of kick things off. But there's other factors that weigh into this sort of stuff. So it's not just isolated to, oh, okay, the Fed's cutting, so US dollar's directly going down. Yes, it's the main and most important one, but for now, you could potentially see the market go, well, we were waiting for this data, it's now come, let's move on. And same sort of thing. Remember when we were back over here, and I said sort of like, we're coming down, coming down, coming down here. I said, you can move back up here and sell it from down here. And that's exactly what they did. They moved it up and they sold it down from here again. Or was it back over here? A couple of these sort of points. Anyway, it's happened a number of times. For the moment, though, it is hanging in the bottom half of this range, right along the sort of supports down here. So any sort of big shunt, and this brings me to today with the BOJ, any big shunt out the bottom side of this is really going to kind of seal its fate, though, I would say, because if we chuck it onto, say, the 4 hour, you can see that obviously, buyers have held it here a couple of times, but look at the reactions from it previously coming down here. Market have really ripped it up, really ripped it up. They've come down now, feeble effort, bit of an effort. This was, as was said, obviously from the FOMC and the aftermath of, pushed up and then sold back down. Like the rally attempts aren't really sort of the same as we had seen previously, sort of flying back up to the top side over here. So, it doesn't mean that, I mean, again, nothing's a certainty, but you just look for what's going to sort of give us a bit of a better idea about what's going to be happening moving forward. And BOJ coming out today, expectation is that they're going to be holding rates. So there's nothing sort of like, shocking with this, unless they do decide to hike. And remember, like BOJ is sort of like notoriously low. The yen's been smashed for ages. Fed's now cutting. If you balance those things and you say, okay, even though it's sort of like, they're still negative rates, I'm pretty sure, negative 0.25 or something like this, they're still at sort of negative rates. If they decide to sort of to run that up and they decide to hike it a little bit, you look at the balancing act, and the balance is that you got one central bank that's raising rates, you got one central bank that's lowering rates, And also the fact that, they kind of in the same camp in the sense that they are, given a long enough timeline, they're both a safe haven currency. So, particularly if you see a combination of sort of like, equity markets selling off and US dollar selling down at the same time, that's really going to bolster yen because, money's going to be looking for those safe havens. You're going to see gold kick on a little bit more. You're going to see yen, CHF, these kind of things. That's the kind of the scenario that you'd probably see where you'd see them, those sort of currencies really sort of pick up a bit of steam. But here and now, DXY, if we get a close down under here, if we get something that really pushes it down here again, because remember we had this push down here on FOMC, 50 base point cut, and then it's springboarded all the way back up over here. It's tried to come down, tried to push up. This push up, a little bit lower than this push up. So the sellers are moving down. This is the sellers here. This is the sellers here. And right now we had a little bit of we have a gap up. Yeah, a little gap up this morning. It's closed it already. So if we push down out here, I would say that that's it for this range here. And then we could potentially be looking for where the market might be deciding to move it. Now, we know that this is pretty much the range. You can see this is, give or take a couple of cents. This is how we get the measured move out the top here. So the size of the range, which we know we could see, been sitting in this range for the last month or so. That's where you'd be probably looking for a price target out the bottom side. So it would be somewhere around this area here. Again, these are levels and they're not sort of time things, but something to this sort of effect would give you a range completion. And I think this has been shored up enough times. We can see definitely that this is where the buyers are sitting. And we've got a pretty good idea that this is where the sellers are sitting because, as I said, like every time it comes up into here, it gets smacked on the nose. So if we sort of get a breakdown underneath this area and a close, minimum 4 hour, because remember, we did get a breakdown under here, but bang, it was a wick. And where the candle actually managed to close was still up in this acceptable range area. So a close under here will give us a little bit more confidence that we're going to be sort of coming down and we're going to be seeing a break. Now, we've got sort of different levels in which we can sort of see some support, like, this is going way back to these sort of lows down here. So this is definitely, this is going to offer a little bit of a buying support. So this is kind of an area to sort of say that, look, if we break this area and close underneath 104, I would say 99.6, 99.7. So let's actually put this as price target and we'll call him price target 1. And this is range measured move. It's good that you can just click on these things in time now. So we've got a couple of different targets we can look for as these sort of come down. Now, where does this go? So this move up to the top. Where's this one? Whoop, that's not it. So this move, this push up here, so as I said, the range push from here, I mean, it's a little bit obsolete, but I mean, I suppose it kind of still works because, we know that's where the sellers are. So of this range, the 161 retracement also comes in line with this area down here that we just sort of picked up, which were the lows from last year, if I'm correct. Have a look on the weekly. Yeah. So as you can see, there's some wick areas down here. So I would be, like with all these things, you don't expect these things to necessarily come through straight away. But certainly a breakdown under here, I would say this is the area we're sort of going for, 99.6. So what do you do with that? So you sort of think, okay, well, if US dollar is going for another leg down, you look at your corresponding things and you sort of think, okay, what's going to benefit the most from that? Well, you've got to look at the full conditions if you're going to see where the gold's going to move. But yeah, other sort of assets are like, your euro, Aussie as well. We've got to sort of weigh in sort of, how the market reacts with that as well. But markets are still pushing up along their highs. So, there's nothing to sort of say that, that's about to sort of target. So one second, let me just take this off. I mean, if you look at this looks like it goes through every single time. Support, resistance, bang, continuation. I'd say that, look, this is probably definitely our next target here. As I said, the sort of area with these wicks. And that is, as I said, last year's high. That'll give us And we'll be back here, April 22. Yeah, geez, wow. You know what I mean? This is sort of going back 2 years, 2.5 years almost. So yeah, quite a level. So I would say definitely, yeah, I could see this sort of break into the bottom side here, just with the flow. Yes, you've got this RSI in oversold, but it's even as it's sort of coming up. I mean, look, it is what you would technically say in something that could see it moving back up like this. But to me, this almost looks like it's getting ready to just roll and just come back down here and just feed along this bottom line here. Once I think we get down to this level down here, then I imagine some revisions with things. I imagine uh, to see a little bit more of a sustained bounce. So the full move here for me will be coming down to this price target. Maybe you overshoot it and you get the measured move price target, but down to the bottom over here. And then I wouldn't be surprised if we get some sort of move back up like this. That's my sort of feeling with it all. I think we still have some short-term US dollar weakness to deal with. And potentially, now that I sort of even say that, I reckon maybe even just up to here and then a bit of a break further down like this. I reckon this is a very plausible because we can see that obviously this is a strong support. We know that this is where the buyers have been sitting. If they break this, if they give this up, fine, you've got some targets to hit, you've got the previous lows, you could wipe those out, you could come back up here, but this is going to become a very strong resistance. So I would be surprised if this came up and did something like this. But I mean, look, anything's possible. You got to sort of call it as you get a little bit closer to it. But certainly at the moment, I could see a little bit sort of more intermediate, like sort of short-term weakness on US dollar. They've been trying to sort of get it off this line, but as I said, these efforts are becoming weaker and weaker and weaker and weaker and weaker. Look, if for whatever reason they decide to sort of rally it up over here, maybe the BOJ hold and maybe US dollar gets a bit of a push from that. So that's the other sort of flip of the coin. But I would say in that instance, you've still got a lot of headwind up over here. You've got these wick highs, you've got these congestion areas. And even once you sort of get up to the top side of this range over here now, if we say it rallied back up to the top of this range like this, you've still got this big falling resistance to deal with as well. So you've got a confluence to keep it in this little range to the bottom side. So there's a lot of stuff saying here that, you know, even if they do get on a rally, people are just going to be selling into it and hammering it back down. So yeah, I wouldn't want to be necessarily dollar bull sort of moving through the rest of the year, despite what a lot of the calls have been. Okay, so that's the bigger picture with DXY. The short here and now, look, is pretty much exactly the same. As you see, a little gap up this morning. It's decided, look, that's the thing. It's gapped up and then bang, it's being sold straight into here. I'm going to be setting my alerts down here. I'm going to be calling these major breaks. Major breakdown and that under 150, 100.50, I think is where we're going to see a little bit of a faster move. And we're going to see some things go down. First little thing will just be to fill that wick. And then, of course, second ones are these price targets that we've made down over here. So we'll see how those ones go. All right, flipping along. We've got Aussie. Aussie very much doing the same thing. This was the plan, well, the thought yesterday to sort of get this move up here and then sort of I expected potentially for it to sell back down and I would have loved to have bought some over here. But I didn't. It went up and it kept running up. And it's funny, it's sort of like it got to this point here. I'm like, oh, geez, I don't want to chase it. Don't want to chase it. And I saw it stall for a bit, and I'm like, oh, maybe people are going to short it or something. I thought, no, look, you know what the plan was at the start of the day, after FOMC, to just sit on the hands, just to not do anything. And so I missed a big section of this run up here, which you know, I mean, that's the name of the game. I saw a guy actually talking about it the other day, and he said, like, you know, you're feeling that FOMO, you're seeing that FOMO, let it happen. And I think that's really good, actually. And I kind of actually sort of told myself that as well. I'm like, FOMO of like, because yeah, I mean, if you watch what I do, Aussie is my main thing that I trade, Aussie and metals. Um, but yeah, I sort of felt it here. I'm like, and it got up to the top side over here, and I started shorting from the 30s. Actually, probably from a few from the 20s. I peppered them from the 20s to the mid 30s, and I caught this move down here. I didn't get the last leg down here, but I caught a pretty good little move down here with a bit of weight on it as well. Because as you can see, this actual channel, despite this little bit down here, which it actually sort of seemed to be obsolete, it does actually seem to be holding um, and respecting it quite well, if you look at this. I mean, as I said, we had this marked out yesterday, but say this one here, you know what I mean? You can see very much in line here, very much in line here. The bounce down here actually caught some long, and I caught some long up through this section over here. You know, and this section here, and from the bottom down here. So, you know, despite that little sort of bit of a sort of fluff stuff around, which, you know, again, these kind of things, when it's going up and down, whipping like this, you know, that's news-driven stuff. News doesn't care about your um, what's it called? It doesn't care about your chart. Yeah, it'll blow levels like anything. It doesn't really matter. But you can see it blew up here. It came back down, up, down, up, down. This here looked like a break and a retest to push down. Didn't quite get it. And as I said, I thought maybe it'd come up here and sort of do it down, but turns out it didn't. Anyway, we can see it almost reacting a little bit from this level again here at the moment. And this goes in line with what I was saying, that I do believe we've still got new yearly highs coming for Aussie. I think that US dollars certainly got some downward pressure in the sort of short medium term. And if we see BOJ cut, I think we're going to see things really rocket. So I think there's a lot of stuff in the camp to sort of say that this is worth sort of buying at these levels, um, because you know we've still got the RBA sort of coming very strong. Sort of we had the jobs numbers out yesterday, which was another very strong number. As I think I sort of covered it yesterday because it was coming out. Like they spam 20, 25K predictions every week. It just doesn't happen. Or every week, every month. And you know, I can't remember 40 or 50,000 or something again, which when you think about it, the US is coming out with like 80 some months and 100. And you know, we're sort of doing almost the same with a tenth of the population, less than a tenth actually. I think I actually heard yesterday Australia just ticked over, excuse me, just ticked over 27 million. I'm not sure about the US, but I think there's 355 or something. So that's, you know, well over, what, 13 or something times, 13, 14 times as much as us. And our jobs are almost at the same level as them. So, you know what I mean? It's with us still having employment staying flat, if we still have, sorry, just bear with me one second, just doing a position. Um, Employment came in 4.2%. Previously, still stayed the same. What they want to see to give the right conditions for rate cuts will be unemployment rising. Like they've said, they sort of, you know, they got to get those unemployment numbers up, which seems like a sort of odd sort of thing. I mean, look, it's not odd into their understanding, but you know what I mean. In the general sort of thought of it all, it's sort of like, yeah, we got to see more people unemployed, and then we'll do it. So basically, push people to the brink first, and then we do it. But this is the point: we're still adding a lot of jobs there. We've still got inflation that is high. What is one metric that, other than feelings, which don't count, um, says that we're going to be cutting rates? You know what I mean? Like, there's just because sort of like people are doing it tough. Well, people are doing it tough because people have been sort of like, I don't know, it's not even people, but like, you know, the government's been overspending, they've botched a whole bunch of sort of infrastructure jobs. Like, there's a lot of reasons as to sort of why we're in the position we're in right now. People borrowing ridiculous amounts, the housing market flying through the roof. You know what I mean? Like, sort of, you want to buy a house, well, forget it. You're living in the bush unless you've got sort of like, you know, some family money or something. But that's no, that's beside the point. The thing is, at the moment, you're not seeing the data to support a cut. You are seeing the talking around a hawkish kind of tone, having a hawkish tone, and you know they haven't even. They're still potentially talking about hikes. You know, the best you can hope for at the moment is that they don't hike. I think we've got the rate decision next week. So if they give a shock cut, then Aussie's going to get hammered. Like that's how that'll work. But I would say at the same time, maybe a hold is pretty much as expected. I do, look, it's hard to call to sort of say, are they going to hike? Are they going to push it even harder? You still got the high job numbers, and remember, sort of like so, you want the job numbers down. You want unemployment up, because that are the signs of like, okay, we need to act, we need to do something. And then you think, okay, what are they going to do? Well, we're going to lower the rates. That's how that'll work. But till you have those things, people are still employing people, they're still expanding. The housing market's already through the roof. I mean, what happens with inflation? What happens with the housing market if they drop their rates? You know what I mean? Like those things will just go through the roof again. So yeah, look, I think there's still a little bit of sort of reason to sort of think that there's a divergence between the central bank's outlooks of the Fed and the RBA. So anyway, that's again the bigger picture with Aussie. The right here and now, you're seeing this little dribble, 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 dribble down. Like as I said, I actually caught some perfect levels down here. I can't remember 80, 89, 90 or something like. It was somewhere around here because Aussie 90s is always a level. I've found going both ways. You can see up here, just under the 90s, bang, knock down. And yeah, I mean, I won't bother going back through it all here, but you can see 90s, bang, 90s, held. Like, you know what I mean? It's got a pretty good sort of hit rate. It doesn't mean it's going to hold every time. I mean, certainly if we come down through here again, you know what I mean? If we break through here, that gives us through the channel for a second time after this lot down here. It also gives us a lower high, and also that'll be a lower low. So that'll see a further sort of like, move like this coming down. Actually, let's change the color of that, same as the pink things on it. This is potentially what you'd be looking at, something coming down like this. Which, you know what I mean, again, it's on a big run. It's been flying around up around the top over here. A little bit of cooling is not going to kill it. But again, we are coming up into this previous area here. So we know that this is the big area. These are where the sellers are really sort of sitting. We've really sort of come through here a couple of times. Again, there's only so many bullets they've got. So once it sort of comes through here again, if we sort of take out sort of, that 68.30, then we're going to be looking at, 68.50 and 69.90, which is, I think these are really sort of our yearly highs just from the start of January where we were really pumping. So we've seen DXY, as I showed a second ago, sort of like it's on the subside of its yearly open. We're also on the subside. So, if all things, and it doesn't work like this with Aussie and DXY, of course, but, all things considered, we should be testing our yearly highs up over here. We're not. We're kind of lagging a little bit off that. So we'll have to sort of see how the rest of the session pans out. DXY seems to be holding this low for now. So we'll see how the rest of this session sort of plays out. But it's a tough call at the moment. As you can see, it's very up, down, up, down, up, down. So it's not really giving you a straight sort of direction with anything. It's very much, as I said, it's just whipping around. So I think certainly, if you want to get sort of like actual proper shorts on, you may be sort of waiting till under 67.45 or so, which is another 50 points off from here. Topside moves above 25, 68.25 would be good, but confirmation is above 68.40 or 68.42. That's really your breakout level over here, because yesterday took out that's August high. I think we sort of tipped those July's highs. Oh no, we've already taken out July's highs, so that's 3 higher highs moving through here, albeit only very marginally higher highs. They are still higher highs. So that's just something to keep an eye on. All right, so yeah, again, not a great deal to sort of say. I mean, this is dribbling here. I think let's just wait for BOJ. You break this falling resistance that we're seeing here, which it seems to be sort of very much respecting. I mean, there's dribble down like this. Generally, if you see something like this, you're about to see a big explosion. It's either just going to be boom this way, or we're going to see a big rocket up to the top side here. I'm in the camp of it going up to the top side, but I'll be prepared if we do decide to sort of break down a little bit more as well. Flip across, we've got silver. Again, same sort of deal. It's just all over the place. We can see that buy zone absolutely nailed it. And this is because we had a confluence of things. We had this little sort of, I'm not a super fan of this rising support, but obviously, it's enough to have shored this up. If we put it on the 4 hour, how's it look? Yeah, it looks pretty good on the 4 hour for me. And obviously it's still moving in this direction. We had the back test of this big falling resistance down here. So here's your breakout, here's your back test, here's your higher high. Well, actually, this technically was your higher high, came down, and then another higher high. So it's consolidating up the top side over here. And this is what I was saying the other day, remember? Well, I was like, look, if we break this level, if we go back and watch my video from Friday last week, and I said, look, yeah, if we break this level here, you got two price targets. One was, 1.5%, which is up to this level over here. The other one was a 4% move. And this is what we've seen. And it's come up here. And this is the thing. This is why, one couple of things. One, you mark things out. You go, yep, why have we got this line here? Why? Because we've seen the sellers over here previously. Two is that, when markets actually fulfill these measured moves or price targets, and then they react and sell down, it's actually a positive thing because people are going, yep, that's it, that's a measured move, and I'll sell it down. It's not just, oh, something's changed, it's gone up here and just arbitrarily rolled over and sort of come down. So at the moment, it's really, I mean, look, it's sitting right in the top part of this range. It's just consolidating underneath this breakout point. I mean, if you wanted to sort of say this, you could pretty much sort of say that this could potentially be something to this effect. Yeah. And if we get a break, that's your next move. That's your next move. If we can break this top level here, which if we sort of get this on our show, let's just use it here. If we get a break from there to there, that's another 3% on that break. So, there's a little bit of work to be done, but that takes us back to into 62 20s, 60 30s, and look where it lines up. Lines up very well with these sort of major highs over here. And this is what I mean. So potentially you start to see these things, and look, maybe I'm just telling a story to myself, but if DXY breaks down and you see the floods into the metals and then you go that next level down and this pushes up over here, would this not then sort of potentially be coming into this sort of resistance level at the same time that DXY, as I showed from the first chart, would be coming into its support area? It's something to keep in mind because really all these things they line up a lot more often than you'd sort of find. Like you sort of think like, oh, there's no correlations, but things no, this is what I call cross-chart confluence, and you see these things all coming into their respective sort of support and resistance areas at the same time. So that's certainly something that sort of shows a decent move once we get above here. So let's put an alert here and sort of say that, look, I'm going to confirm this as a breakout if we get above here. So this will be breakout, confirmation, price target 32, C215, make it a little bit sort of conservative on that side of stuff. But yeah, for the moment, it's certainly, holding up the top side over here. See if this sort of lines up with anything. Not really. I mean, could potentially be seeing something like this, which could give you a little bit of a sort of channel resistance coming up through here as well. Not a big fan of that sort of channel there, but it does kind of line up a little bit here. So I'm seeing pull back here as well. I think we've already completed this move, haven't we? Yeah, so this move here was this measured move coming through here as well. Again, another thing that sort of lines up that says, okay, this is where we'd be putting our price targets, and you see a little bit of a sell-off, and that's what we've had here. All right, so yeah, top side above 31.46. You break down underneath, 30.46. So there's one buck range through here, which is a decent size for copper. You're coming down, you're looking at these sort of levels over here again, maybe to see if it can sort of hold here. If it doesn't break higher, and if it does break down here, you got to be careful because the way that these potential channels work is you want to see top, bottom, top, bottom, top, bottom all the way. Once one starts to pull away from a top, so for instance, as you can see at the moment, this is kind of the move that you're getting, then you're starting to get a bit of a wedge play. And so that's something to be wary of. I'm going to make this because this is in a confirmed line. I don't really do this, but how do we do this? Settings. This is in a confirmed line, but that could be potentially a wedge setting up there, which obviously would bring us back down to the 29s over here on a break of these levels over here. You know, go underneath 30 or so because you've got to break the channel, break this horizontal, and then you sort of be looking, okay, well, where's the wedge? And the wedge will give you, I don't know, move back down to sort of 29 or something like that. We'll play that one out when we see it. But as I said, for the moment, I'm thinking top side moves. Gold. Uh-huh. It's the inverse, what's it called? Inverse high heel, which, as you can see, bang, reverted all the way back up there. Which typically, as I said, was a bit more of a sort of idea that it's going to come down here. And I've been sort of out of gold from the other night. So again, yesterday I sat out and I missed this big move back up here. But I didn't want to short it because I do believe we are still going higher, particularly as I said with the weaker US dollar. But I did want to try and buy it at this retest. So at the moment, you can see that sort of obviously it's tried to come back down here. Buyers aren't even waiting. Buyers have moved from here all the way up over here. So they're charging up at the moment. That's not sustainable forever, but it doesn't mean that it does actually sort of look a little bit more bullish as you can see them stepping up the game coming up through here. I think this puts a nice line in the sand though, that if we do come back down to this, if we find this sort of ranging through here, and then a break underneath that, that'll open it up and that'll give you some potentially good shorts then because you put the low in, you've seen the buyers have stepped up. If we see a lack of buyers or a lack of this constant move up with the buyers, then we know that it's going to be starting to sort of come back down over this side here, and that could offer some potential good shorts. But for now, I just don't think for me anyway, the risk reward is there to try and sort of short this thing at all-time highs while buyers are still progressing and pushing up higher. Break above that 2600, well, it's anybody's guess. I've seen calls of 2650. Again, I don't really know how they achieved this number. Um, because even if you drag like the most recent highs like this, that to me kind of sort of shows a little bit more of what you might be dealing with. If you take those last two highs there and then you move up to here, this is giving you sort of 2630. So to me, this would be kind of your upper price target, 2630. A touch of this line, regardless of when that comes, I think if you break above 2600, that's going to be your move, and then we're going to see a bit of a rejection from that level there. Yeah, I'd probably take these highs opposed to these highs here because obviously it hasn't. If you drag a line from here to here, it gives you about here, and it obviously isn't respecting that. But if we get a push up above 2600, I would say 2630 would be the level I'd be looking for. And again, I'll just point out that these targets, they're still a decent move away. That's like 43 bucks or something on gold, but they're not massively away. And as we saw with DXY, the price targets, they're not massively away either. See how they all start to sort of line up together? Same with the silver. So I still think we've got some upside, but I think we could then potentially see it sort of rejecting from this rising resistance. I think we could see gold hitting its support, DXY hitting its support, and pushing back down. Aussie testing yearly highs, which is another sort of 80 points or so. Um, I think that's pretty much the course of action that we're seeing moving forward. All right, copper. Copper finally got its break. Bang. And this has been such a trade. I mean, if we look at this through here, we got this big falling resistance, the break back into that buy zone. This sort of like, offered it a number of entries time and time again, and bang, it's away. And now you've got your break, you've got your back test. We've seen the sellers try to hold it, try to hold it, try to hold it a number of times, even again there yesterday. And this is what I was saying, in the buyers, they didn't wait down here, they just moved up here. They sat there and boom, and they pushed through. And this is what I was saying yesterday. What happens if the buyers push through? Well, this is what happens. They just hammer it through to the top side. You know what I mean? Like, so I'd say this is pretty much, for me, confirmed, because this is on a 4 hour. You've got 5 or 6 candles closing above the resistance. So if you see any sort of pullback to these levels down here, I imagine that's going to be bought up. And next price target looking for is this one here. So we're looking around 450 really. I would say is a pretty decent area. If we put this on the daily, might be able to sort of get a bit of a clearer sort of picture with it all. Look, this is an area I think goes way back over to here. So we saw it priced here on its way down in 22. Obviously, the support became sellers. Move through here, stuffed around here a little bit on the way up. It was resistance, broke through. It was support. It was support. Pushes up. So they're fairly chunky kind of range areas here. A couple of 100 points, but as you see with copper, you can move a fair bit. I would say up to 450 is a fairly decent level. Maybe overshoot to 457. But I would be surprised if it goes through here first shot. So this is the kind of area that we're looking at just up over here at the moment. And yeah, certainly you break above that wick. Moving to price target. All right. And finally, we'll just sort of finish off with the yuan. And here we go. We got the break and it is moving down. And this is where I've sort of been saying for a long time, long time. Actually, up here, I've been bearish on the yuan, or on USD yuan, so I guess bullish on yuan, but bearish on this particular pair from this level up the top over here. Remember when we were in 1% range for like 3 months straight? And obviously, we've had some flare-ups around here, but now we're seeing it sort of break, stuff around, do what it does. This is the thing. This is the little range that we had. We can see down here, we got the break and close underneath it, and now we're seeing continuation. This is a good example of why we sort of say, wait for the candle to close. I mean, this is on a daily, but, point's still the same. It's rejected up, it's rejected up, it's rejected up, and even here, it pushed even right up to the top out here, took out any kind of like potential stops that were above this level here before going bang, crashing down. We've now got the close underneath it, and you've got a higher chance that you're going to see continuation and move down here now. Because really, this move has already done its break, back test, and boom, down. So I think 7 is the target in the short term for this move. So if we have a quick look at this and say, this is our little range that we're dealing with here. So bottom here. 702 gives you a measured move target there. But as I said, this is a big area. The 7, I mean, is a round number. We could see that, this was resistance, 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 resistance over here. Stands to reason, support, support, bang. This is what we're going to be seeing. Doesn't mean it's going to go straight down to this, because of course we got this little measured move here. But if you extend these ones out and call that the actual range, it gets you a little bit down closer to it all. But certainly I think we've got more downside in the immediate here. This also, remember, with the yuan, lines up with a stronger stronger Aussie dollar. So, the more strength they've got, more assurity they've got over there, more chances they are to be happy to buy our stuff, more demand for our Aussie dollar. Which will give us a bit more strength there as well. Just while I'm on this, have a quick look at gold-silver ratio. It is really sort of hanging along this bottom line over here. This would be interesting. If this takes out the bottom line here, I think this could be a bit of a drop down over here as well. Remember, end of the day, you want this moving down for more of a sort of gold, metals bullish market. And silver will outperform gold in those instances, hence the gold-silver ratio, so gold weakening, silver stronger kind of thing. But overall, metals markets will be moving more positive when this chart is moving down, like this move down here, and of course when we had this sort of drive back up over here. All right, let's have a quick look at the news. Flip across, as I said, number one thing on the ticket today is BOJ. Now, so BOJ never give a time. See, tentative, and press conference, tentative. Generally, it's between 12 and 2, and it's 2 to 12 right now. So, yeah, we'll see how that one sort of plays out. But I would say that most likely we're going to see a hold. If we do see this kick up, if for whatever reason they do decide to hike, I think that's going to draw out a whole bunch of flow from US dollar. We're going to see yen obviously strengthen, and I think we're going to see metals and Aussie as well strengthen on the back of that. So that's what my call is for it all. If it comes in flat, I think maybe wait for the press conference to sort of see what they have to say with it all, see if they've got a bit of a hawkish tone, see if they're what they're sort of thinking moving forward. All right, that's it from me.